As we come to the end of the 2011 financial year here in Australia, we'll be producing a series of screencasts to help you understand the various tax offsets and tax rebates which might be available to you. So we're also going to include some advice and some practical instructions on how to claim your various entitlements if you're preparing your own tax return, whether that's via e-tax or TaxPack's paper version. So as the low income tax offset is one of the most searched phrases on both our blog and our website, we'll start the series by taking a look at LITO. Today's overview, we'll start with a quick explanation of how offsets generally work and what is meant by the term non-refundable tax offsets. Then we'll answer some of your LITO specific questions, looking at amounts, eligibility and claiming. And this is followed by some worked examples and a few words on the income of minors, along with some links to various resources. So let's get started. The low-income tax offset is based on your taxable income, and taxable income is a result of your assessable income, less any allowable tax deductions. So assessable income would include things like wages and salary and any assessable government pensions and payments. Tax deductions are usually those expenses that you've incurred in order to generate that income. So tax deductions we can see are going to reduce your taxable income. Now once you know your taxable income, the tax on that income can be calculated using the current tax rates. Now tax offsets are a little bit preferable to deductions in that we see that comes off that amount to directly reduce your income tax liability for the year. Now, generally speaking, tax offsets are usually not refundable and can't be carried forward to the next income tax year. There are a few exceptions to this. Franking credits, education offset and private health will be a few examples of refundable offsets, but LITO is considered a non-refundable offset. What does that mean? Well, a non-refundable offset can be used to reduce your tax liability to nil. However, if your tax offset exceeds the amount of tax payable, the excess portion wouldn't be refunded to you. We'll see an example of this later on. So let's take a look at some basic low-income tax offset information relevant to the 2010-11 financial year. And the question most people want to know is how much is it? Well, this year your maximum offset is $1,500. That's up $150 on the previous financial year. LITO starts to reduce at $30,000, but it doesn't cut off entirely until you reach $67,500. So if we take a look at the shade out and cut off thresholds here, we can see that if you earn anything up to $30,000, if your taxable income, I should say, is anything up to $30,000, you'll receive the maximum low income tax offset rebate of $1,500. Now, if you're over $30,000, but you're under the cutoff threshold at $67.5, you'll start to lose just 4 cents in the dollar for every dollar that you're above the $30,000. So you might be wondering about now whether or not you're going to be eligible for the low income tax offset this year. There are a couple of things to consider. The first is residency. Are you a resident for tax purposes? Non-residents usually aren't entitled to any tax offsets. And do you meet the income test? Now you'll remember from the cutoff and shade out thresholds that if your taxable income is under $30,000, you'll actually be entitled to the maximum rebate, the maximum benefit, which was $1,500. If you're over $30,000, but you're still under the cutoff, you'll receive some benefit of LITO. It won't be the full amount, but there will be some benefit to you there. And if you're over the cutoff of $67,500, I'm afraid you're not entitled to any portion of the low income tax offset. Now, how do you see that you get it? Well, unlike a great deal of other offsets and rebates, you don't need to apply for LITO. Once you put in your tax return, the tax office will automatically calculate it, and if you're eligible, they'll apply that for you. And you'll see that that's happened once you get your notice of assessment back. So let's take a look at a few examples of the low income tax offset at work. We'll consider Ken, who's on a taxable income of $16,000, Holly on $40,000, and Jeremy on $67,500. Here's a look at the current personal income tax rates for residents. It's worth keeping in mind that these rates don't include the Medicare levy. Now, the tax-free threshold, as we can see, is $6,000 as usual. LITO effectively increases the tax-free threshold so that adult taxpayers entitled to it aren't going to pay any tax on income up to $16,000, and we'll see that with our first example of Ken. Now, Ken has assessable income of $17,000 with deductions of $1,000 to bring his taxable income to $16,000. Now, before the low income tax offset, tax on taxable income of $16,000 is $1,500. And that's how we calculate that. It's just your 16 less your 6,000 tax-free threshold, and we'll calculate the remainder by Ken's marginal tax rate, which in his case is 15 cents on the dollar. Now, we know that Ken is entitled to the maximum rebate of $1,500, and this reduces his tax payable to zero. More good news for Ken is that he's probably going to be exempt from the Medicare levy as well. So Medicare low income threshold for individuals this year is $18,839. If Ken's had any tax pulled out of his pay throughout the year, he can expect to receive that back. Now let's take a look at Holly's situation. She has a taxable income of $40,000, so we know she's not going to get the full tax offset, but she will receive some benefit. So before the low income tax offset is applied, the tax on the taxable income of $40,000 is normally $5,550. There's my calculation for that there. So we calculate the LITO entitlement for Holly. It's the maximum rebate less 4 cents on the dollar for everything that she's above the $30,000 to give her a low income tax offset rebate of $1,100, and this is going to reduce her tax payable from the $5,550 down to $4,400. Now remember, this doesn't include the Medicare levy, depending on Holly's circumstances of course, but she'd probably be looking at around $600 on top of that for Medicare. And finally, we have Jeremy, and Jeremy's taxable income is $67,500, and the tax on that is $13,800. And because Jeremy's at the low income tax offset threshold cutoff point, we know that there's going to be no entitlement to LITO for him. But just to prove that, we can see that if we take the maximum rebate, less 4 cents on the dollar for everything above the $30,000, which happens to be $1,500. So $1,500 less $1,500, that's zero entitlement for Jeremy. So the low income tax offset is also a popular way to distribute tax-free income to children under the age of 18, especially by trustees of discretionary trusts. So considering the low income tax offset, this year trustees are able to make tax-free distributions to minors of up to $3,333. Now that's up from the $3,000 of last year. However, there are some changes on the way as a result of the recent federal budget. So with effect from the 1st of July this year, LITO is going to be unavailable to minors on their unearned income, and that's going to reduce the effective tax-free amount that can be given to them to just $416. Now, the Australian Taxation Office do have a low income tax offset calculator which you can actually use to determine your eligibility and the amount of your offset for you. So if you just go to www.ato.gov.au, click on the Individuals tab, and then look down the sidebar for rates and calculators, you should be able to find it from there. And that's it from us today. If you have any questions or you need some more information, feel free to get in contact with us. Our telephone number is 1300 35 22 35, and that's the cost of a local call from any landline in Australia. We're also online. You can check out our website at lewistaxation.com.au, our blog, which is a great place to ask any questions that you might have, at blog.lewistaxation.com.au, or you can find us on Facebook or on Twitter.